Today is Monday, January 31st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, let's talk grains. Overnight, soybeans, soy oil, and corn futures made new contract highs. Why? And do you feel this higher trend will continue?
I think we have a couple of things. Number one, I think money's coming into our markets as a hedge against inflation. And then there's some pretty bad stories out of South America that their crops are lower than what we were trading maybe 2 weeks ago. And so that could spur some increase in demand for U.S. corn and soybean exports. And on Friday, there was some people that lowered their estimates of our bean carryout and corn carryout, which I think also is helping bring in new longs. I do think it's going to continue. I think that when we actually see new export demand and the government actually starting to lower the carryout, I think prices were going higher. If we close over 1525 in the nearby beans, 640 nearby corn, and the 817 area in Kansas City nearby wheat, we could go to $16 beans, we could go to $7 corn and $9 wheat, and soybean oil with increased demand suggests that we could test 80 cents a pound.
Good times for farmers and producers. Steve, last week, a private group estimated higher U.S. 2022 soybean and wheat acres and lower corn acres. Do you agree?
Right now, I think it's still unknown. I think a lot of farmers in the central Midwest are concerned about dryness, and they're concerned about the high cost of fertilizer, but they have money in their pocket, and I think that normal rotation should increase bean acres, and down south they should increase wheat acres, but I kind of think that they'll also increase corn acres. And where are they going to get that extra acres? We've had some prevent plant acres that didn't get planted because of weather, and I think if we have a dry than normal spring, they'll get a lot of acres planted.
Finally, Steve, what's the net managed futures position in grains and oilseeds, and what are the fundamentals saying as well?
I think that we're close to a record long in the index funds and the grains. The funds keep adding to long positions in beans and in soybean oil and in corn. They're short Chicago wheat maybe as a hedge against their long positions. But I think in talking to these managed funds, some people say they look at the tightness of global supplies, they look at inflation, and they look at the possibility of some dry weather in the U.S. In 2022 as positive places to park some of their long positions.
Thanks, Steve. Alan, looking at the financial markets, what are the main reports that traders should be looking at this week?
Well, probably the most important report will be on Friday with the employment situation. That's when we'll get non-farm payrolls expected to be up 200,000, and the unemployment rate expected to be unchanged at 3.9%. But also on Thursday, we'll have durable goods, and that's anticipated to be up 0.1%. So I'd have to say the most important report comes at the end of the week, and that would be with the employment numbers.
Alan, is there a possibility the Fed could hike its Fed funds rate 50 basis points rather than 25 basis points at the March 16th policy meeting?
Yes, there is. There's nothing that says the Fed can't change rates by other than 25 basis point increments. But I think that's very unlikely this time for the Fed to move with 50 basis points, even though we did have one Fed governor, Bostic, indicating that the Fed did not rule out a 50 basis point hike. But I think that's very much a minority view. So the consensus is that the Fed will raise at the March meeting, but most likely by only 25 basis points.
Yeah, I agree. I think a 50 basis point rise would be a surprise to the street.
Definitely would be a surprise and unlikely.
Finally, Alan, looking at the currency markets, which currencies are showing strength and what type of opportunities are there in this market segment?
Well, in the currencies, I still think it's the pound that should be bought on breaks. Of course, we have the Bank of England meeting on Thursday, and it is widely expected that they'll raise their key rate by 25 basis points. Also, there are additional rate hikes likely from the Bank of England. So the pound, I think, is the currency to be trading from the long side. However, the yen is still likely to work lower. It was just a couple of weeks ago, and also more recently, that the Bank of Japan governor very strongly indicated that the central bank is not interested in raising interest rates anytime soon. So with that accommodative policy remaining or likely to remain, that should undermine the yen. Now, it was just earlier this month that the yen hit a 5-year low. I would not be surprised to see that low taken out again. So trade the pound from the long side and the yen from the short side.
Thank you both. Please remember the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.